Installment agreements, also known as payment plans. It's pretty obvious what a payment plan is, or an installment agreement. The word installment agreement has special meaning though with the IRS. It's basically something that if you have an installment agreement, if it's a formal installment agreement, then the IRS cannot levy or take any other adverse action against you, collection action against you, if you have an installment agreement in place. Exception, they can file a federal tax lien, and they often will if you owe more than $5,000. So, what types of installment agreements are there? There's essentially four that I could identify. There's something known as a guaranteed installment agreement, and in a nutshell, this is what it is. If the taxpayer owes less than $10,000 and can full pay the liability within a 3-year time frame, then they're guaranteed that installment agreement. The IRS basically can't say no. Whole bunch of conditions, obviously, whole bunch more details to it, but that's the bottom line. If you owe 10 grand or less, you can pay it off in 3 years, call the IRS, they'll give you an installment agreement guaranteed, especially if you haven't had one recently. If you've had one in the past several years, then they don't have to give it to you, although my practical experience says they probably will. The second type of installment agreement is called a streamlined installment agreement. Basically, if the taxpayer owes under 25 grand, $25,000 that is, and it can be paid off within 60 months, then the IRS will go ahead and give that person an installment agreement without having to provide any financial documentation. That's also true in the guaranteed installment agreement. No financial documentation is typically required. It has to be supplied, though, if demanded by the IRS. Because one of the prerequisites in both the guaranteed and the streamlined installment agreement is that the taxpayer has no present ability to pay the liability in full. I kind of leave that out most of the times because I just assume that that is the case, that the taxpayer doesn't have the ability to write a check for 25 grand. The third type of installment agreement is something that I invented the name for, basically. No one else uses it to the best of my knowledge. I call it a complex installment agreement. It's basically where the liability is over $25,000 and the taxpayer cannot pay it within a 5-year time frame. Then essentially the IRS will go ahead and do some financial analysis and determine what the taxpayer's ability to pay is. Oops, I hate it when I drop the microphone. The fourth and final type of installment agreement that I was able to identify is what's known as a partial pay installment agreement, and that is essentially an installment agreement where the taxpayer cannot full pay the liability during the life of the collection statute of limitations. If you don't know what I mean there by the collection statute of limitations, go back and look at the earlier video blog post dealing with that, and you'll understand. Basically, a partial pay installment agreement is a great deal. It means you're not going to have to full pay the liability within the lifespan of the installment agreement. You're going to get a deal one way or the other. That's it for now. I'm over time. Thanks for tuning in.